Good morning, everyone, and thank you for joining us. This is Jason Cogdell, and I'm here with my colleague, Chris McCauley, for our final Pro Benefits webinar of 2014. We've had great participation this year, and we thank you for joining us. For those of you that we work with, we appreciate the opportunity to work with you, and certainly just have enjoyed bringing these webinars to you. We've tried to address a range of relevant compliance topics and other topics related to our work with employers and advisors during the webinars for 2014. I hope those topics have been helpful to you. We are in the process of finalizing our schedule for 2015, and we'll be posting that schedule soon on our website, and you'll certainly continue to receive invitations. Your input is welcome on topics and anything else related to the webinars or our monthly compliance updates that we share. So if you've got some input to share or a suggested topic for a webinar, you're welcome to share that with Chris or with me anytime. A main part of our mission at Pro Benefits is compliance and support for employers and plan advisors. As our president, Gary Knight, said recently, there were a lot of different things we could choose to invest in during the ACA era, and one of our main areas of investment has been compliance. We've effectively doubled down on compliance, and that's why Chris and I have a role here. That's why we work hard to do what we do and to help you, and we see this as a big need now and going forward, so that's going to continue to be a focus for us, and our current goal is to bring you a monthly compliance update of relevant topics via email and monthly webinar updates. One thing we did not do as much of in 2014, I think we'll do more of in 2015, is have webinars on short, simple topics, including some very short webinars on some basic topics, such as one request we recently received was for a session on what is a qualifying event under Section 125 and how does that interact with some of the other new rules. So I think we'll be tackling some of those topics in 2015 and look forward to bringing that to you. Now today, our focus today is big picture, not small picture, big picture as we end 2014 and move into 2015. Every year we do a benefits compliance checklist, which we do our best to make one page and a one-pager that can be helpful to you and your team, whether you're an employer or an advisor. Hopefully you have a copy of that checklist already. It was attached to our compliance update that was sent out on December 3rd. A second copy was attached to the webinar invite that we sent out December 11th. And Chris has, just in case anybody is on today and you don't already have a copy of the compliance checklist, Chris has sent it out via chat. So there's a link in the chat that you can pull up the PDF. So that's the compliance checklist. If you'd like one that's modifiable or brandable, let us know, and one of us will send that to you. But anyway, our goal is big picture today. We don't really want to introduce new items. Obviously, it's not only year-end, but it's also the holidays. You don't really want a lot of new material today, and we don't want to bring you new material today, I assure you. Our goal is really to simplify and to try to look ahead to 2015, to try to streamline what needs to be done within the range of compliance topics that we typically address. So what we've done today is, just as on the compliance checklist, set the 2015 agenda based in this order: the ACA Section 125 plans, HRA plans, ERISA, COBRA, and HIPAA. So that's what we're going to cover today, and we're going to try to not beat you down with details, but just set this up and allow you to ask questions. So your questions are welcome. Submit them through the question box on the control panel. If you have a question you don't get to during the session today, send it to us later. We will get back to you. As I go through these items, the checklist, and as I move to the ACA checklist on your screen now, the main checklist items which correspond to the primary bullet points on your one-pager are in green. So the main topics are in green. If it's a black header, that means it's just supplemental material underneath the main checklist item. But the main checklist items are in green. If you've got the checklist handy, print it out. It may be something you can take notes on if you are a note taker. But again, your questions are welcome anytime. We'll address some as we go. We'll address some more at the end. Now, as we go through the overall checklist for 2015, there is no other place to start than the ACA. Unfortunately, that's just kind of the reality of the benefits world that we live in. I think that number one on the ACA checklist continues to be assessing the employer mandate. If you are a large employer, 100 or more full-time employees plus equivalents based on 2014 employee data, then the mandate applies to your organization in 2015, and you need to know when it applies, how it applies, what your maximum exposure is. Hopefully those are items, if you're a large employer, that you've already done. If you are near the 100 threshold, this is something you need to look at, and something you need to look at quickly to see, are you potentially under 100? Are there any affiliated companies? All items we've talked about before, no doubt you've talked about internally and with your insurance advisors. Hopefully you know where you stand on that, but if you don't, now is the time to revisit that, because the employer mandate is the #1 ACA compliance item for 2015. It will also be the #1 item for 2016 when the threshold moves down to 50 or more full-time employees plus equivalents. And I've got a few more slides I'll show you just a moment on the employer mandate. The other ACA compliance items, if your plan is remaining grandfathered, you should issue the grandfathered plan notice, basically just saying this plan is grandfathered. Again, just as a quick refresher, to stay grandfathered, the plan is still measured back to March 23rd of 2010, the day that the ACA was enacted. So for a plan to maintain grandfather status, we're not comparing it year to year, but we're comparing the new plan for 2015 back to March 23rd of 2010. There are still grandfather plans out there, so notice needs to be issued if the plan is still grandfather. Summary of benefits and coverage, SBC. This is not a new item, but I put it on the checklist because 2015 is the first year of active compliance. Basically, with the SBC rule, which I think took effect for plan years beginning in 2012, so we've lived with it for 3 years now, but we've been under a limited non-enforcement period where HHS wasn't going to really enforce the SBC rule or issue any penalties. That non-enforcement period ended, and so now we're in live enforcement period with SBC. So I think it's a good time just to make sure that if you're, let's say, you're fully insured, self-funding your major medical plan, there's an SBC, it's distributed or made available to the employees that need to receive it, the eligible list of eligible employees. The SBC also applies to any self-funded group plan like an HRA plan. Make sure that that SBC is in place. Gotten a lot of recent questions about the W-2 reporting requirement and whether or not that applies. There is still an exemption that applies for employers that issued less than 250 W-2s in the prior calendar year. So as an example, if your organization is going to issue fewer than 250 W-2s for 2014, then you would not have to report on the 2015 W-2s the total cost of tax-free group health coverage provided to your participants. But if for 2014 you issue more than 250 W-2s, you'll have to report for 2015. The same analysis would have applied for this year. If you issued more than 250 W-2s in 2013, then you would have to include the group health number on your W-2 for 2014. And if you need more information on that, let us know. We'll be happy to provide you something. Another item for 2015 is assessing the new reporting requirements. And I know that you all who are employers are probably getting blasted from HR groups, compliance groups, whoever, about new reporting requirements. The payroll companies are actively communicating this. This is part of the employer mandate. It's not something that's due soon. In fact, the first reports are due in January 2016 for the 2015 year. But it does apply to all employers that are 50 plus. So even if a group is between 50 and 99 and exempt from the mandate penalties in 2015, it would have to do the reporting. It really tracks and mirrors the W-2 process. There'll be one summary report that goes to the IRS, individual forms that go to full-time employees, and those will be distributed in January 2016 for the 2015 year. But this is something you want to have on your list because you're going to need to track some data items in terms of being able to do that reporting in 2015. I'll say just a quick bit in a minute about that. But this is on the front page of your list for 2015, is just assessing this reporting. What do you need to do? When do you need to do it? And who, if anyone, is available to help you with that reporting. And finally, I'm not going to say much about this, but self-funded plans have to continue to pay the ACA fees. The first required reinsurance contributions are due this month. Participant counts were due by December 5th to HHS, or actually CMS, and the employers are going to get billed and pay those in 2 installments. Some rare good news here is after employers, pay the fee, which this is the large fee, the $5.25 per participant per month, or the $63 annual fee that certainly has had a large increase on rates. And just by the way, for a fully insured group, the carrier has already paid this fee for you and built it into the premium, so there's nothing you need to do. Self-funded plans have to pay it directly, so that's going to be paid now for 2014. For 2015, the fee actually goes down to $44 for the year instead of $63 per participant. I don't know what the fee will be for 2016, but 2016 is the last year that the fee is scheduled to apply. So keep that in mind for those of you who are self-funded plan sponsors paying required reinsurance contributions. Same thing for PCOR fees. Fully insured carriers are paying it for fully insured plans. Self-funded plan sponsors have to pay it for a self-funded major medical plan or an HRA. This fee applies to HRAs where the required reinsurance contribution does not. The next deadline for the PCOR fee is July 31st. This is the fee that's paid with IRS Form 720, and there's a notation there about the current amounts, which are $2 for the plans that ended before September 30th, 2014, and then $2.08 is the index number for plans that ended after that. So that's what the PCOR fee says. Now, a couple quick things on the employer mandate, and again, this is just supplemental material underneath the main ACA compliance checklist. So these are not direct compliance checklist items, just more explanation on the employer mandate. And I want to say a quick word about the reporting, and then we'll move on to the other topics. First of all, the continuing question is, can anything happen to the mandate before January? It appears to be set to go, full systems ahead for 2015. There's certainly a slim chance that the mandate could be delayed by 1/1. No one's expecting that at this point, but anything is possible, as we've seen with the ACA. So, we've got 15 days for something to happen, and it certainly could happen. Now, if it does go into effect as scheduled, that means it applies to the 100-plus employers for 2015. And just to clarify, whether or not an employer is 100-plus is if the employer looks at its 2014 data, and it would use any consecutive 6-month period or longer during 2014, looks at the number of full-time employees, which would be those that averaged 30 hours or more per week for the 6-month period. And then anyone who didn't average 30 for the 6-month period, regardless of maybe it was a full-time person that just only worked a month of the 6, all those hours go into the equivalency bucket. The standard for equivalency is 120 hours per month, so the employer would add the full-time number plus the equivalency number. If it's under 100, then that employer is exempt from the mandate, or exempt from penalties anyway in 2015. If it's 100 or more, the employer is subject to the mandate in 2015 unless it can use a separate 6-month period to get under 100. The IRS control group rules for common ownership do apply. But importantly, there are no other exemptions to the mandate other than getting under 100, not nonprofit status, not church status. So if you're an employer or if you're an advisor, and there are any employers who may be subject to the mandate, either due to common ownership or size, they need to be assessing that now so that they know where they stand. There are some items that could help an employer even if they're over 100. As an example, due to a transition rule, the maximum penalty for an employer that's over 100 in 2015 is the number of full-time employees minus 80. So, for instance, an employer that's over 100 due to a number of part-time employees but has 80 or fewer full-time employees may still have flexibility because their maximum potential penalty may be 0. But that's something that needs to be assessed so that employer knows exactly where it stands and they don't take on any unnecessary liability for 2015. There are continuing discussions about skinny plans meant to meet the A penalty of the employer mandate but not the B penalty, or so-called MVP plans that do not offer hospitalization. There are other scenarios you can address with your insurance advisor, but large employers need to make sure that whatever they're doing, that this analysis is done and done quickly, because obviously we're coming up on the time where potential penalties could start to accrue under the mandate, and so that's something that employers need to know. There is a special 3-month grace period rule. That's my description, not the description of the guidance, for employers that become applicable large employers for the first time due to size as we go into 2015 and 2016. So employers that could potentially take advantage of that may want to look at that as an option in terms of when they're going to offer coverage or make any adjustments for the mandate. Now, couple of quick things for the 50 to 99 groups, because I know there are a number of them either on the session today or represented here by their advisors. The 50 to 99 exemption that was in the final guidance does apply if the 3 qualifications listed under the first bullet point there are met. And if so, that means a 50 to 99 group, even though they'll have to do the reporting for 2015, would not be subject to any penalties for 2015, and the mandate would effectively apply to them in 2016. That would mean, as an example, that the affordability analysis 9.5% rule would not apply to the group in 2015. The 30-hour rule would not apply to the group in 2015. So that group would have more flexibility in terms of who they're offering coverage to and how much they're charging for coverage. We've previously, earlier in the year, talked about certification. Will a 50 to 99 group need to certify to the IRS before 2015, whether or not it's exempt in 2015? And the answer to that is no, that the certification will be done as part of the first employer mandate reporting that's turned in January 16. So groups in the 50 to 99 range, there's nothing they need to do now, but they will need to do the reporting, and that reporting will include, among other things, a certification. So just wanted to mention that briefly. Now, as to the reporting, I know that a lot of questions are coming up on this, and I mentioned a little bit about it earlier. You may see this reporting called by several different names. The primary name for it is Code 6056 reporting. But the forms that are included that will be shared to the IRS and employees are forms 1094 and 1095. The carrier for fully insured plans will be doing reporting on the employer's behalf, and then the employer has its own reporting. Form 1094C is the summary that goes to IRS. Form 1095C is the form that would go to employees. So it's designed to look a lot like the W-2 rules. There is a list of 9 categories of data that the employer is going to have to report to the IRS and include on these summary tax forms. So that's a list that I would suggest you as an employer look at relatively soon in the first quarter of 2015, just to identify where you are, how much of that you have now, and how much of that you're going to need to change your system to track. Don't get too hung up on the actual forms yet, because they're probably going to change. We have draft forms now, and there's some good Q&As on irs.gov, but the forms are going to change, so don't get too hung up on the forms yet, and we've got plenty of time to figure that out. I think the key is just knowing what data needs to be tracked. So what I would put for reporting under your ACA Compliance Checklist item for employer reporting in 2015 is, number 1, as listed in the bottom bullet point, assess the data that needs to be tracked in 2015. Look at the list of 9 data items. And then number 2, examine options for outsourcing. The biggest question is, will the carriers do it? Because if the carriers will do it, even though the carriers won't have all the data that needs to be reported, then that's going to be a simple and easy option for most all employers. Same with the major medical TPAs. We know that a lot of the good payroll providers are going to offer outsourcing. Whether or not that is the best option, remains to be seen, but some of them seem to be on top of this requirement. But I do think there will be options to outsource. Carrier would probably be the best option, but there will be options to outsource, and that's something that we as employers can assess as we head into to 2015. Chris, I'm going to let you go ahead and transition to 125, and those of you that have submitted questions on the ACA items, I'll answer those, and feel free to continue submitting your questions. We've got some great questions so far, and we'll get to those as we go here.
Thanks, Jason, and again, welcome to everybody out there. I know, especially for large groups, the big elephant in compliance for 2015 is the ACA, but now is as good a time as any to look at some of the other compliance topics as well. So I'm going to talk about a couple of those topics that are also listed on your compliance checklist. Many of these topics we've discussed in detail during 2014 on previous webinars, so I'm going to go through the topics briefly, but if you'd like a deeper discussion of the topics, often you can find them on our website, on our webinar page for the recordings of previous webinars. The first thing I want to start off with is Section 125, Cafeteria Plan Compliance. Really the most important aspect of 125 plan compliance is an SPD, your plan document, and thinking about 2015, what do you need to do in terms of your documents? It's just considering any changes or updates that need to be made to your SPD, whether that be correcting your plan year basis. Lots of employers have changed their plan year recently for various business reasons. So if that has happened, you want your 125 plan to reflect that change. There's been, obviously, we've talked about the recent legal changes to the definition of spouse as it pertains to employee benefits. So if you need to change that definition, that's something you want to consider. We've talked about in a previous webinar the new qualifying events for marketplace open enrollment. Pro-benefits clients that use the documents, the 125 documents that we've provided, that qualifying event is already included in your 125 document. Our documents are drafted basically to include all permitted IRS qualifying events. If you're an advisor and you're advising a client that doesn't use one of our documents, you might want to have your client check the document to see if those new qualifying events are included in the documents before they make the change. Also, the Health FSA maximum has been indexed for 2015. The new amount is $2,550, so you want to make sure if you want to allow that maximum, that maximum is outlined in your SPD. And again, for pro-benefits clients that have already in the past chosen to allow the maximum, the SPD provides for an automatic indexing anytime it's done by the IRS. And then finally, if you're changing your contribution approach, for 2015, if you've decided you'd like your strategy for 2015 is going to be to offer your employees a large bucket of money which they can use for various benefits, medical, dental, FSA, and that's going to be your contribution approach in 2015, then really that should be laid out in the 125 plan as a benefit credit. So basically the benefit credit in the 125 plan would describe what that money could be used for, what it couldn't be used for, and just help the employee understand that credit more. And then finally, the Health FSA rollover, you can again consider it for 2015. We're finally getting through the full cycle of first plan years that have adopted the Health FSA rollover, and what we've seen in our data is confirming basically what we thought from the beginning, that the rollover is helping to increase participation. Employees definitely have liked the rollover, and it has made them more comfortable electing to participate in the FSA and electing higher contribution rates to the FSA, and so we've seen that the rollover is something that both employers and employees that have adopted it really do like.
Chris, can you say a quick word about just general 125 compliance and the need for employers to make sure these documents are in order, even for a simple premium-only plan?
Sure. Really, the document is the foundational requirement of 125 plans. A written document is a requirement that is included in Section 125 plan, and really it's the most basic element of 125 compliance. If you're ever audited, probably the first question you're going to be asked is, can I see your 125 plan document? And if you can provide a compliant 125 plan document, that's really the first step in compliance, and it will really get you right on the right foot in terms of compliance. And if you ever are audited, that's really the first step in showing that here our plan is compliant, and the document sort of moves you in the right direction. But really, the document itself is the foundational requirement of the 125 plan.
Second question, Chris. If an employer allows contributions to health savings account bank accounts, does that need to be documented in the 125 plan?
Generally, yes. An HSA, if an employee is going to contribute to an HSA, then that needs to be documented in the 125 plan. And then if the employer is also going to contribute to the HSA, then generally it is recommended that that is done through the 125 plan as well. So the answer there is generally yes, that if any contributions to the HSA, generally it is helpful if they are run through the 125 plan, and that should be documented in the document. Okay, now we'll move on to HRA compliance. I've talked about the first bullet point here. Really, it's the same for HRAs as it is for FSAs in terms of potential updates that need to be made. And then also some ACA requirements that apply to HRAs. Jason touched briefly on the SBC. PCOR, again, for your HRA is not going away in 2015. For pro-benefits compliant clients, we plan to do the same thing in 2015 as we did in 2014. And what that is essentially calculate the fee for our clients, fill in Form 720, which is the form that the PCOR fee is reported on, and send that to the client. The client really only needs to review the Form 720 and send in the check with the report. And then also we've touched in previous webinars about the HRA integration rules as well, but that's another compliance issue to look for in 2015.
Chris, can you say just a brief word about the HRA integration rules and the requirement that HRAs be tied to the group health plan rather than standalone plans?
Yes, in the past, employers used to be able to offer a standalone HRA, which was essentially employer money that could be used for medical expenses, even if there was no group medical plan. But under the new ACA rules, now HRAs going forward, generally, if they're providing medical benefits, they need to be integrated with an employer health plan. And basically what that means is that anyone that is enrolled in the HRA is also enrolled in the group health plan, which complies with the ACA market rules.
Thanks, Chris. I think an important point for those of you that are HRA plan sponsors or considering a plan in 2015 is that, most of the HRA rules have not changed. An employer can still use a deductible reimbursement concept or any other HRA plan design tied to a group medical plan. Really, the main changes since 2013 involve employers that include plans not linked to group health plans. So the majority of HRAs are still very effective. In fact, HRAs are still growing in terms of popularity and use by employers seeking to control cost. And also dental and vision HRAs are growing in use as well. But the main changes are for employers that want to use these plans without a group health plan.
Okay, now moving on to ERISA compliance. We touched briefly on the 125 SPD, but really ERISA requires an SPD for every ERISA benefit for every plan that is offered. So what you want to do is you want to look at all your ERISA benefits, whether you're offering medical, dental, vision, your medical benefits, or life or accident plans. You want to look at all these ERISA plans and make sure you have a compliant and current SPD, whether you have it on file and that you've distributed it to all participants. Generally, if there's been no change to the plan, then a new SPD is not required each year. Generally, if there's no change to the plan, the SPD is good for 10 years. But if the SPD has changed, if there's been updates to your plans, and changes have been made to the SPD, then those SPDs should be distributed once again to plan participants. There's also wrap SPD considerations. Oftentimes employers use a carrier booklet as an SPD, and you just want to make sure that all the information provided in that booklet is all the information that is required by ERISA, and if there are a few things missing, you might want to consider a wrap SPD to sort of supplement that carrier booklet to become in full compliance with the SPD requirement. Also, Form 5500 reporting again next year. Generally applies to health and welfare plans with 100+ participants on the first day of the plan year. Form 5500 is generally due by the end of the 7th month following the plan year. So if you have a 2014 ERISA plan year, your Form 5500 is due July 31st of 2015, and that requirement applies to all your ERISA health and welfare benefits as well. And there's also the 5500 also includes a new M1 component that generally last year was an attachment to the Form 5500. I think the advanced copies of the 5500 for next year have come out, and really all it is now 3 additional questions on the 5500 itself. So the DOL has really made compliance with this respect easier as this component is now included on the 5500 itself. Moving on to COBRA, we didn't have a webinar this year about COBRA. It could be a good topic for next year, but the first thing you just want to do is make sure you want to determine whether COBRA applies to you in 2015. So COBRA in 2015 applies to all employers with 20 or more employees on a typical business day in 2014. Generally, that's pretty easy to determine. It's just some of you employers with around 20 employees for the 2014 plan year, you should count your employees and determine whether or not COBRA applies for 2015. If it does apply to you, then you just want to confirm that you're providing your 7 required notices, and one of those notices is obviously the most important, which is the election notice. And you want to make sure that that notice has been updated to include the required information regarding marketplace coverage. And you can look at the DOL model notice online that includes pretty extensive language regarding marketplace coverage, and that might be something you want to incorporate into your election notice. And again, finally, just confirm that COBRA is being administered for all eligible benefits, and you're providing the required notices and thinking about the optional notices, many of which are also recommended. And then my last point is just generally thinking about HIPAA compliance. You want to confirm that you have business associate agreements that are in place and they're updated and comply with high-tech rules. For our HRA and FSA clients, last year we sent out business associate agreements to our clients, and we expected our clients to sign them and send them back. If you did not sign it or send it back, or you would like another copy, just let us know, and we'd be happy to provide the document, the business associate agreement for you. Finally, you just want to make sure and confirm compliance with your wellness programs. Maybe some of you have heard in an HR blurb about EEOC challenges to wellness programs, and you just generally want to consider wellness compliance going forward.
Thanks, Chris. Jason here again. We've gotten a number of questions. I think we've responded to most of them in writing. Feel free to get in your questions if you've got one and want to get in the next few minutes. I'm not going to go through this, but wanted to leave you with a slide of hot topics and some things I think will continue to be relevant for discussion and analysis as we go into 2015. You'll notice some of these have been hot topics for a while. They're not going away, both related to the ACA and otherwise. One topic at the bottom of that slide, spousal coverage continues to be a hot topic, whether employers are carving out spouses, whether they're making them ineligible if the spouse has access to other group coverage, whether they're implementing a spousal surcharge, and then how to handle same-sex spouses after the recent legal development. So I think spousal coverage will continue to be a hot topic as we go into 2015. Some of you have asked for more details on the employer reporting, which we will provide. If you need a reference summary or the list of 9 data items, when we send you, we're going to send you today, this afternoon sometime, a copy of the slides and a link to the recording for the webinar. If you want more information on that employer reporting for 50-plus groups for 2015, just reply to that email and ask for it, and we will send that to you. I trust that you have a copy of the Benefits Compliance Checklist, but again, if you would like a second copy of that or a modifiable branding version of that, reply to the email as well, and we will share that with you. Otherwise, in the interest of your time, we're going to go ahead and close the webinar, but Chris and I are going to hang around for just a few more minutes and answer some of the written questions. So if you've submitted a written question we haven't answered yet, or you want to submit one now, hang around for a few minutes and we will get to that question. If there's anything else you need on any of these topics, let us know. We look forward to working with you in 2015. And without question, Merry Christmas and Happy Holidays to everybody here, to your families, to your team and colleagues. And thank you for your working with our company. And best wishes for a great end of 2014 in a couple of weeks, and we will be in touch soon.